Now, if we're talking about where Bitcoin could go in the next big bull move, very simply, I would just look at these highs, right? And again, I'm not, by the way, this target isn't a near-term target for me, right? I mean, it's not like I'm saying by year end we're up to this level, but if you're talking about a bullish type potential move, you can't deny the 2017 high on the log chart connected to the 2021, which it touches it again basically in late 2021. And again, it would make sense that in the next bull, we could head up into that level, which believe it or not is all the way up, really around 230,000. So, I mean, we're talking, over $100,000 more.
Bitcoin just pulled one of its oldest tricks, the double top. On the daily chart, price surged, pulled back, and then ran straight into the same high again. At first glance, it appeared to be a breakout. But Gareth Soloway from verifiedinvesting.com says that's exactly how the trap is set. Shorts park their stops just above the prior high, and once those stops trigger, they flip into buy orders. That extra push higher looks bullish, until it isn't. Bitcoin quickly reversed, printing a sharp red candle that screamed short-term top. Since then, the price has drifted lower. Soloway notes it's early, but a possible bear flag could be forming. Only 3 candles have been printed so far, and these patterns don't carry real weight until at least 5 are printed. If it does develop and break down, he's watching support around $112,000 as the first key level. On the flip side, Bitcoin isn't out of bullish options. A clean daily close above $123,300 would invalidate the trap and unleash momentum into the $130,000. That's the line in the sand for upside continuation. Step back to the midterm view, and Soloway says the real anchor is the uptrend line dating back to April 2025, right after the big Liberation Day sell-off. That trend line is the spine of the bull market. As long as Bitcoin stays above it, the broader structure remains intact. However, if the price cracks under $116,000 and confirms below that level, the door opens to a deeper downside. First target, the $98,000 pivot dollars. If selling snowballs even $86,000, the base from the 2023 bear market, isn't impossible. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that understand what's unfolding. Thanks for watching.
Let's start with the daily chart. Taking a look here, we can see that again, what we have in the near term is what would be called a double top. Double tops, again, you can see a prior high pivot. We pulled back and came back down. We then charged back up and we went right back to that high. Now, double tops notoriously pierce the prior high. They do that because a lot of individual investors will put stops right at that previous high. So if price goes above it, those stops again on those shorts, they will be turned into buys, right? So to cover a short, you must buy back Bitcoin. And that's why in general, you'll see pierces of double top. So just because it gets above that level, don't get fooled yet until it confirms the breakout. And obviously we didn't see a confirmation of the breakout here. In fact, we had a nasty red candle reversal pattern here, or candlestick. Now, again, what makes a reversal candlestick? All right, so engulfing reversal would mean Bitcoin would have had to open at the prior high here from the prior green candle. It did not. Obviously, we pulled back here and it opened here. So it's not engulfing reversal. It's just a reversal candle. But to suffice it and simplify it, a reversal candle is a down candle that engulfs and closes below the prior big green candle. And that in general is a slight negative signal on the Bitcoin chart. Essentially, it reinforces the double top as a near-term high. Now, from that point, we've come back in and we're now potentially, and I say potentially because we don't know yet, but potentially putting in a short-term bear flag, right? And again, let's be clear on this. Bear flags, they need to mature. Maturing bear flag would to me be 5 candles or bigger going sideways. If we look at the current chart, there's only 3, right? 1, 2, and 3. So this would be referred to as an immature bear flag. Immature bear flags notoriously are less reliable than mature bear flags, all right? So again, it is starting to form it, but we really want to see, does it continue to go sideways for another few days? If it does, then it's going to increase the odds of a rollover over in Bitcoin, in which case your next major support would be around 112,000. All right, on the other side, let's talk about the bull case in the near term. Let's say this immature pattern doesn't mature, and in fact, we start to spike up. If we get above this level here at around 123,300, if we get a daily close and the next day we confirm above that high, then that is a purebred breakout, and you would expect price to head up to 130 plus thousand on Bitcoin. So that's the short term. Now, let's zoom out just a little bit. I want you guys paying attention to this key trend line. There's this low from April of 2025. This was the Liberation Day sell-off that hit asset prices, the stock market, as well as Bitcoin. If we take that low and we drag it up, look at what we have. We have this beautiful upsloping trend line. And in fact, I'm going to change the color so it really pops out here in yellow. So this low to this low, and notice it tags this low exactly to the penny. This now becomes your level that on a basis for a longer term bias. So again, we're not talking long term. Long term, Bitcoin still is a major bullish mover, right? So again, you go back to, 2017, the highs there, every subsequent bull market high, we've made higher highs. So the longer term trend, that's not up for debate, guys. That is up, 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 up. The near and midterm, so near term, we're watching the bear flag. In the midterm, this trend line here becomes of a paramount concern, because if we break below and confirm below, let's say 116,000, even if we go down and test this 112,000, we're still below this uptrend trend line. And again, think about the word trend line. It's a trend. Right? So the idea is if we take this line out here, the trend that has lasted since April of this year would be broken. And at that point, I would think, yes, you get a bounce at 112,000, but it likely even goes lower than that after you get a bounce, potentially back to this 98,000 pivot. And you can see again how the 98,000 pivot goes right through here, right? This high here and this low right there. And so that very clearly tells us that would be a good level of support. Needless to say, if we continue down, there are other trend lines to monitor on the charts. I would be very intrigued by this level as a longer term bull market. Again, we talked about the bull market being the longer term angle. So 86,000 would be a really good level. And you can see going back to 2023, essentially the bear market for crypto was down in this range, right? You could even extend this out here a little bit, but suffice it to say, this is really when Bitcoin started to rally higher, bull flag, rally higher, retrace into that same trend line, and then the latest pop to the upside. But for me, as someone who would look for a long-term entry on Bitcoin, likes to accumulate some more long-term, starting around 86,000, 87,000, that would be a level to watch, no doubt about it. Okay, so that gives us a little bit of a synopsis there on the midterm and the near term. Again, near term, we're still watching to see, is this a bull flag or not? And we're watching in the midterm this trend line. And obviously, we know if the bull market resumes or the next leg up, if we confirm above 123,000 bulls
Gareth
on
Soloway
Bitcoin.
points
And
to a
again, as
simple
I've
but
always said, I'm a
powerful
long-term
roadmap.
bull
Take
on
the
Bitcoin. I
2017
see the
high,
value in
connect
it,
it with the late
considering fiat
2021 high,
currencies and the
and
debt
extend the
that so
line on a
many
log scale.
industrialized.
That trajectory lands near $230,000 as the next primary bull cycle target. He's quick to stress this isn't a near-term prediction but a structural guidepost. In a complete bull phase, that's the kind of upside the charts suggest, well over $100,000 higher than today's levels. But charts always have two sides, and Soloway isn't ignoring the downside. Bitcoin has been riding a rising trend line since 2020, one that's now creeping into the $80,000 range. If broader markets stumble, say the Nasdaq drops 30 to 40% in a full-blown equity bear market, Bitcoin won't be immune. In that scenario, a retrace into the $70,000 to $85,000 zone is not just possible but likely. That zone is critical. Hold it, and Bitcoin sets up a textbook buy the dip moment, preserving the bull market structure while resetting leverage and sentiment. Break it, and the picture shifts into something far more serious. A deeper reset would open the door to levels no one's pricing in during the current optimism. Let's get back to the interview.
Now, if we're talking about where Bitcoin could go in the next big bull move, very simply, I would just look at these highs, right? And again, I'm not, by the way, this target isn't a near-term target for me, right? I mean, it's not like I'm saying by year end we're up to this level, but if you're talking about a bullish type potential move, you can't deny the 2017 high on the log chart connected to the 2021, which it touches it again basically in late 2021. And again, it would make sense that in the next bull, we could head up into that level, which, believe it or not, is all the way up really around 230,000. So, I mean, we're talking, over $100,000 more. But the other side, remember, you can't just listen. I understand most people watching this video are going to be bulls on Bitcoin. And again, as I've always said, I'm a long-term bull on Bitcoin. I see the value in it considering fiat currencies and the debt that so many industrialized, first world countries are taking on. And by the way, second and third world too, but those aren't making up the crux of the economic scenario at this point. But the idea again is that you need something that's digital. Gold, you have metals, etc. But really digital on the digital gold side, that's Bitcoin and is being adopted as such by many, many institutions. So let's talk about the bear case. Well, very clearly to me, there's an upsloping trend line here, right? And again, what's interesting about this is you can't deny that this is very close to that level that we just talked about, which again, as this inches up, this is going to get into that 80,000 range. And that would again give us a pivot point from the lows in 2020 for a potential breakdown into that support level. So I suffice it to say this: if we enter a bear market in stocks, in risk assets, let's say we get a major correction, more than the correction that we saw during Liberation Day and the subsequent downside that followed. Essentially, if you get that in the stock market, let's say the NASDAQ drops 30-40%, my guess is Bitcoin would come back towards that 70 to 80 plus thousand level. And as long as that area holds, then that's your buying opportunity. If that breaks, some trouble really starts where you could see something much, much worse, something like the Great Recession of 08-09 in the stock market. And obviously then Bitcoin could go down a lot more. But right now, assuming we don't get to that craziness of risk asset and recession and financial crisis levels, the 75, 85,000 range is really, to me, an intriguing opportunity for a retrace buying opportunity. And like I always say, guys, when I look at Bitcoin, and really I do this with all assets, right? I never go all in on my first buy. I always assume the worst case scenario, which says, okay, well, let's put 1/5 of a position starting long at 85 or 86,000. Then if it drops another 5,000, another 1/5. If it drops, or every 10,000, you inch in just a little bit. The idea is dollar cost average. Dollar cost average on things like Bitcoin, on things like quality names and stocks, that over the long term should be a good entry price because you're constantly dollar cost averaging versus going all in. You can be underwater massively before that asset turns around. And that's if it does turn around to those levels. Remember, the NASDAQ in 2000 did not make a new all-time high for 15 years. So little things like this, again, nothing that we've experienced in recent history since a lot of investors got involved in crypto or in stocks. But I do warn people that that can happen, and we want to be very, very aware of it. And again, I just speak from experience here. Okay, lastly, what I want to do here, guys, is flip over to the regular chart again. Let's look at Bitcoin dominance. This is kind of an interesting chart. This has me a little bit more on the bearish side near term. Again, we had the short term, immature bear flag starting to form. But look at this chart, guys. This is a little bit concerning for Bitcoin. Now, again, listen, Bitcoin could go sideways and altcoins maybe are getting ready to rip higher. I actually think that's a plausible scenario for altcoins to start to outperform. And I'm going to tell you why. Altcoins to me, and I'm not talking about Ethereum. Ethereum's done great. Granted, it hasn't made a new all-time high, but very likely I think it can. But the thesis here is you have a parallel, beautiful highs all along here. Notice every time you hit it, you pull back. Every time you hit it, pull back, pull back, pull back, right? And the idea here is look at the low to low, and Bitcoin dominance is starting to slip. So the idea here is it doesn't necessarily mean Bitcoin is going to come lower. What it actually could mean, maybe Bitcoin just goes more sideways, but altcoins start to gain traction. And the thesis here, and I know I'm kind of branching into altcoins at this point, but the thesis here, what would make altcoins start to run and gain traction? And the answer would be the Russell. I look at altcoins as the Russell 2000. The Russell 2000 is basically small caps. So if small caps, which have underperformed the S&P and the NASDAQ, if they start to outperform, money goes into essentially rotates from big cap tech down to small caps. Money could rotate from Bitcoin into altcoins. And so again, Bitcoin dominance, a lot of people look at that and say, oh, that's really bearish for Bitcoin. It actually just may mean that Bitcoin is going to, if this is truly breaking down, and we don't know that yet. This is the weekly chart. Again, it needs to not only close below, but then confirm. But if Bitcoin dominance is breaking down, it could mean altcoins are getting ready to outperform in the near term, where Bitcoin dominance could at least come back into this level, and that could mean another leg up. And I do want to point out that the Russell has vastly underperformed. All money flow, or not all, but majority of money flow has gone into the mega caps. The mega caps, Nvidia, Microsoft, all these have sucked it up, much like Bitcoin. Bitcoin has sucked up that money flow, right? Everyone's gotten into Bitcoin, but they've forgotten some of these other altcoins. Now, again, I'm not going to pretend to say, oh, the crap coins are the place to be, but what others? Avalanche, Chainlink, some of these other ones that are still underperforming massively. Again, those may be the recipient of some money
The crypto
flow
market
here.
just got rattled. Bitcoin, Ethereum, and XRP all sold off hard after hitting fresh highs, sparking fears the entire sector could be tipping into crash territory. The sell-off was sharp. Bitcoin slid from last week's record $124,000 down to $114,000, a near 10% hit in just days. Ethereum and XRP followed a similar path lower, indicating that the weakness wasn't isolated to Bitcoin. What makes the drop stand out is the backdrop. Only a week ago, the total crypto market cap hit $4.2 trillion, its largest bubble yet. Then came a curveball, President Donald Trump's announcement of a $12.2 trillion crypto bombshell. The details are still being processed through the system, but they have added fuel to an already volatile market. Meanwhile, Wall Street is on edge for another reason. JP Morgan just flipped its stance on the Federal Reserve, and the timing couldn't be worse for crypto bulls. Combine that with warnings from major banks about the new Genius Act stablecoin bill, and the risks start stacking up. That legislation could spark as much as $6.6 trillion in account withdrawals, a shockwave that would ripple not just through crypto but also the broader financial system. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.